If you're following our Global Economic Outlook series, hit subscribe to stay updated with new country releases. Mexico economy. 2026 outlook reflects a phase of balanced but subdued growth, with macroeconomic indicators suggesting that the country's economic momentum is neither rapidly accelerating nor seriously weakening. Mexico's economy in 2026 is characterized by steady conditions, manageable inflation, moderate unemployment, calibrated monetary policy, and a controlled debt burden. The overall trajectory points to stability as the central theme for 2026, driven by a mix of domestic demand resilience, external pressures, and cautious policy responses. A central indicator of Mexico's economic performance is the GDP annual growth rate, which has experienced fluctuations and at times contraction in recent quarters, but is projected to remain positive as 2026 approaches. Data from the third quarter of 2025 show a slight contraction in GDP compared with the previous year, reflecting economic softness, with the annualized rate near a zero to slightly negative level in that quarter. However, broader model-based forecasts indicate that annual growth will end 2025 near positive territory, around 0.4% to 0.8%, and expand modestly in 2026 toward roughly 1.0% to 1.5% as activity recovers. This moderate growth, although far below Mexico's historical long-term averages or the performance of some regional peers, is sufficient to avoid recession and reflects a stable if slow pattern of output expansion. The unemployment rate in Mexico offers additional evidence of stability. Official statistics and market insights show unemployment in the mid-3% range through 2025, a level that has been relatively low historically and suggests that labor market conditions remain intact even amid broader economic slack. While a substantial portion of employment in Mexico remains informal, low unemployment figures contribute to consumer confidence and support baseline consumption, a key component of aggregate demand. Monetary policy in Mexico has adapted to shifting inflation and growth conditions. The central bank progressively eased interest rates in 2024 and 2025 in response to moderating inflation and weak growth, resulting in a policy rate near 7% by late 2025. This rate environment reflects a cautious approach to stimulate economic activity while maintaining price stability. Into 2026, rates are expected to remain at similar levels, supporting credit availability and broader economic stability. Inflation in Mexico has moderated significantly from the elevated levels seen earlier in the decade. In 2025, inflation trended toward the central bank's target range of 3 to 4%, with occasional fluctuations tied to volatile components. As of late 2025, inflation was reported near 3.8%, with core inflation slightly higher. By 2026, inflation is expected to converge further toward target levels, supporting stable consumer purchasing power. Controlled inflation contributes to the overall stability of the economy, providing predictability for consumers and investors. Fiscal conditions and public debt dynamics in 2025 and 2026 also align with the stability narrative. After a period of elevated deficits, fiscal consolidation efforts aim to moderate spending and stabilize public debt. Government debt as a share of GDP is estimated to be around 50 to 52% by late 2025, a manageable position relative to many advanced economies. These debt levels provide policymakers room to maintain essential public services and targeted investment without jeopardizing fiscal sustainability, reducing fiscal risk and supporting long-term confidence. Domestic demand, a key driver of Mexico's economic stability, continues to exhibit resilience. Household consumption, supported by stable employment and moderating inflation, has remained a consistent contributor to GDP. Formal job growth has been modest but positive, and activity in the services sector, particularly retail, tourism and transport, contributes to steady demand. Residential investment and durable goods consumption have shown gradual improvement. External factors also shape Mexico's economic stability. The country's substantial trade ties with the United States expose it to external demand fluctuations and geopolitical shifts that influence export performance. Weakness in key export industries, including automotive and manufacturing components, weighed on overall output in 2025. However, trade diversification and integration into regional supply chains provide some offsetting stability. Remittances from abroad remain an important source of foreign exchange and support household income, sustaining consumption where exports are not the primary growth engine. Investment trends in Mexico reflect moderate confidence rather than robust expansion. Private investment has lagged due to high uncertainty and cautious business sentiment. Credit conditions, while supported by stable interest rates, have not translated into a significant uptick in capital expenditures. Public investment has focused on infrastructure, but fiscal prudence has limited expansive spending. This pattern of constrained investment contributes to the slow but stable growth trajectory, as firms prioritize consolidation over aggressive expansion. Structural issues such as productivity gaps, regulatory challenges, and informal sector dynamics continue to temper Mexico's potential output growth. Addressing these areas remains a long-term policy priority, but progress in 2025-2026 has been incremental. Policymakers have emphasized strengthening public institutions, improving the business environment, and enhancing education, but significant productivity gains are likely to materialize only gradually. In summary, Mexico's economy in 2026 reflects a macroeconomic environment of moderate GDP growth near 1 to 1.5%, unemployment in the mid-3% range, stable interest rates near 7%, inflation converging toward 3%, and a government debt-to-GDP ratio around 50 to 52%. These indicators collectively suggest an economy that avoids sharp downturns or overheating, operating within a zone of predictability and resilience. While growth is not rapid and significant structural challenges persist, the broader stability of key indicators supports a cost-effective environment for households and businesses, positioning Mexico to navigate uncertainties with continuity and cautious optimism. Stability is the central theme driving Mexico's economic outlook for 2026. Growth is balanced but subdued, avoiding a boom or a bust scenario. External pressures and domestic resilience interact to shape the trajectory. Credit availability continues to support household and business demand. Investment remains cautious and highly selective across sectors. Productivity gains are arriving gradually, not overnight. Purchasing power is stabilizing as inflation moderates. Predictability and resilience define the near-term environment for investors. 2026 points to continuity and cautious optimism for investors. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.